Hi there, welcome to another edition of Ask Spurrell CPA. Today we're talking about Canadian payroll tax risks, and I have Tyson here along with me again.
Hello.
So Tyson, so we're just coming up on the new year, so what are your goals for 2019?
Just, stay plugging away at work and get back to school here and complete some programs to pursue my CPA.
Excellent. Any big trips planned this year?
Not yet. Looking to have a kid in 2019. So.
Wow, that's a big goal. That's the big goal.
That's the big one. But, so it's hard to plan a trip around that.
Yeah. Okay. So the quote I think that we have here when it deals with Canadian payroll tax risk it's a Michael Gerber quote, author of The E-Myth. One of my favorite books is the fatal assumption is if you understand the technical work of a business, you understand the business that does the technical work. So if you are a contractor and you're great at framing houses, do you know how to run a framing company? Or if you're a dentist and you know how to, fill cavities and drill, fill, and bill, do you actually know how to run a dental practice business? Those are actually two different skills, and a lot of people don't realize that. And one of the problems that arises is Canadian payroll taxes. And the stat we always go through is 50% of all businesses go out of business in 5 years, and 29%, so roughly a third of them, are going to go out of business because they run out of cash. And one of the big reasons is payroll taxes. They're not set up to deal with them effectively. And the story is business owners, they come to us and they're behind on payroll tax and they're staring down big penalties. They've already been assessed big penalties and they're accruing interest right now. So what are the questions that these business owners should be asking so they're prepared to deal with this in a more organized manner?
First, what does the employer contribution of CPP and AI of 7.37% mean?
So what this means is you have to remit to CRA. You're not just withholding tax from the employee's check. There's an employer contribution on top of it. So over and above what you deduct off the employee's check, you have to contribute roughly 7.37% of CPP and EI of the employer's money and send it to the CRA on behalf of the employee. That's in addition to stuff that you deducted on. So it's really important to distinguish that. You're not just sending amounts that you deducted off the employee's checks. You have to send amounts in addition to the amounts that you deducted off employee checks. And it's roughly 7.4% here in 2019. Just went up thanks to the beautiful federal government, but that's nice. But yeah, it just went up in 2019.
All right. Besides employers, CPP, and EI, what are the three other components of CRA remittances?
Yeah, so each one of those CPP and EI, there's two. So you have employee CPP, you have employer CPP, they're equal. Then you have employee EI, and then you have employer EI. And the employer EI is 1.4 times. So if you have $1, for every dollar you deduct off of EI, off an employee's check, you have to send $1.40 as the employer. And then you have tax. So those are the five components. CPP employee, CPP employer, EI employee, EI employer, and then the tax withheld. So there's five components of the remittances that you're going to send into CRA, and two of them aren't deducted off the employee's checks. They're simply paid by the company.
Right. When are most payroll and their remittances due to be submitted to CRA?
They're due on the 15th day of the month following when the paycheck was issued. And it works on a cash basis. It's not the pay period, it's actually the payday. So if the payday is in January of 2019, those payroll remittances are due by the 15th day of February 2019. So generally that's how it works. There are some smaller organizations that can do quarterly. If you're slightly larger, you have to do twice a month. But most small businesses are monthly on the 15th day of the month, following the month in which the paycheck was issued.
Okay. What is the potential penalty for being just 1 day of submitting those remittances?
It's huge. It's like loan shark, mafia type penalty. It can be up to 20%. So you say you have a $10,000 of payroll remittances due, both from the tax withheld from employees' checks and the employer's contribution. It can turn into $12,000 overnight. That's 20%. But that 20% happens in 1 day. So we're talking, we talk about credit card interest a lot, and credit card interest at 19.9%. That 19.9% is over a whole year. This payroll remittances can have a 20% penalty in one day. It is if you annualize that over a year, it's a huge amount. It's like I said, it's a mafia type territory interest amount. So it's not something that you want to mess with. It's the most expensive type of financing that you can get is trying to borrow from your payroll or remittances. So 20% overnight.
Would you recommend waiting until the deadline to submit your payroll remittances?
No, I wouldn't. It's a dangerous game. It's usually the beginning of the end for a business, or at least the beginning of a real dark period for the business. So the best practice is simply you pay the employees. Most of the payroll remittances you deducted off their check. You have to top off with another 7.4% roughly, depending on where their maximums are throughout the year. And you should just send that to CRA at the same time you pay the employees. That amount is due. You're processing it. You're calculating it. It's more simple to do it on a paycheck by paycheck basis. It takes less time rather than go back and total which ones you paid, which ones you haven't paid. Every time you pay the employees, you send in the remittances that are due. That's the best practice. That's the way to do it. You don't get behind. You're not using funds to operate your business that aren't really yours.
Mm-hmm. How aggressive is the CRA in collecting remittances compared to other balances?
Relentless. They're relentless. They view payroll remittances as trust funds. So in other words, they're not your money. You should have deducted that and sent it in to us. Whereas there's a little bit more grace when it comes to personal tax or corporate tax that are due. We can normally get 6-month payment plans, no problem with personal tax or corporate tax. Payroll tax, they are on us, and they want their money now because they view it as, it wasn't your money. You knew exactly how much you deducted. You knew how much you were deducted because you deducted it off the checks, and then you didn't send it to us, right? And it's just not the way to finance your business. The penalties are so big that in most cases, you'd be better off financing your business through credit cards than delaying your payroll payments. So for simplicity, best practice, it's not your money. Regardless of your deadline's the 15th day of the month or bi-monthly or quarterly, once you deduct it, you pay the employees, you send in the remittances that deals with that paycheck, and you can run your business, with a lot less stress.
Mm-hmm. Are directors personally liable for the payroll tax?
Yeah, you can't get out of it. Sometimes people think that, if it goes bankrupt, I can just shut down the business and I'm off the hook. You're likely a director for that business, and you are 100% personally liable. Both you and any of the other directors they're liable for those payroll taxes. They're going to survive the business. CRA is going to keep coming after you, whether that business is still around or not. So that's if that was a move, we'd see new businesses starting up all the time to avoid payroll tax. But that's not a move. CRA has their interests protected because they can come after the directors personally for a corporation. So it's not one of the things that a corporation gives you limited liability from. You can't protect you from outstanding payroll taxes.
Okay. Why is it advisable to have only one spouse as a director in a risky business?
So sometimes if you think the business might go sideways, if there's, let's say it's a big contracting business and there's a lot of self-perform work, and there's a chance that the prime contractor might not pay you. Now you could be out, you have $100,000 in payroll and you had $35,000 in remittances, and what if you don't get paid? This is a new business. You'd want to shut down the business. Well, now, if you don't have a lot of assets, sometimes you can, even if you have a bunch of assets, you can protect some of them because CRA can't come after both spouses if they're not a director. Your spouse isn't liable just because they're married to a director. That doesn't mean anything. It's if you actually are a director. So let's say you have your house, for example, and you have $100,000 worth of equity in your house. CRA can only get 50 of it if you own that house with your spouse and your spouse is not listed as a director. So sometimes it's a way to mitigate some of the risks with payroll. They can only get so much. Mm-hmm. It's not generally the way you want to go down. You want to make sure you're well funded, but it can be a play to mitigate risks if it is a inherently risky business and you want to go down that path.
Okay. How does the CRA find out when you're behind on your payroll tax when you file T4s?
Yeah, so that's a good question. So as soon as you file your payroll tax, you're gonna as soon as you file your T4s, you're going to give a total of all the remittances you should have remitted throughout the year, and then of course CRA is going to compare that to the remittances you actually remitted throughout the year. And as soon as they see the shortfall, now they know you've been short paying them throughout the year. So that's generally when they find out. I mean, they can always do a payroll audit before, and you can get caught red-handed if you're not doing it. As your accountant, we don't report to clients. That's not our job. But we know as soon as we file that T4, now it's just a computer algorithm that's tracking you down. There's no human being involved. The computer registers that you've paid $40,000 for the year, and you should have paid $50,000 for the year, and you're $10,000 short. And they're either going to demand that you pay that $10,000, or that could trigger an audit themselves. Now they're worried about the whole process. So you're at a higher risk of being audited. So there could be some other personal benefits that are going to be attacked, or some other contractors that should be employees that are going to come under the spotlight. So that's kind of the day of reckoning, is when you file that T4s for the year. Now CRA knows there's a deficiency, and they're going to come calling within 30 or 60 or certainly 90 days usually for that shortfall.
Okay. How can effective tax planning help eliminate arrears payroll tax?
Yeah, this is a great question, especially this time of the year. Is sometimes, although you didn't pay as much for your employees as you wanted, maybe the owner didn't have an efficient tax strategy. So we paid a bunch of payroll tax for the owner that was actually unnecessary. Mm-hmm. So we can reclassify that payroll tax paid as the owner as payroll tax paid for the employees, and then come up with a more efficient strategy for the owner that they're not going to have to use that much payroll tax. And what happened to us, not too long, a couple months ago, a new client came in, and he was, he said, Josh, I'm behind on my payroll tax. And I said, okay, leave it with me. We'll see what happens. I do the calculations. And yeah, he was behind on the amounts he should have paid his employees, but he submitted payroll tax far and above what he needed to do. There was much more efficient strategy to pay him, much more effective combination of salary and dividends. So we're able to reclassify that. It actually came out that he paid more payroll tax than he needed to pay. Once we kind of captured the benefit of the payroll that he paid himself. So I think that's what we have for today on Canadian payroll tax risks. As always, leave your comments below, and we'll try to address any comments or questions you have in any future videos. Thanks again for watching.